Welcome to Charts Today. My name is David Linton, and today's edition for Friday the 6th of January comes to you from Laos in Asia. And we start by looking at the dollar index, just falling off again a little bit last couple of days. So we're below the cloud here. No real serious downside targets to talk of anywhere really. So we expect this move to be fairly short-lived. So dollar's still looking strong, but just encountering some short-term weakness. It's up slightly this morning, but the key thing is that the overall strength will rule. Euro has shown some recent strength in the last couple of days with that dollar weakness, but again, there's a lot of weakness here in the euro, a lot of downside targets. We do have these upside targets of 107 and 109. That's about anywhere between 1 and 3% upside, but these bigger downside targets are still hanging over the euro, so we really do expect that to come back into play at some point soon. Basically, in the downtrends, the counter trend moves are short-lived and not of great magnitude. Looking at the yen, we just see that again, just having come back against the dollar, just slight recovery this morning in the dollar. The yen strengthening here, dollar weakening. Now dollar just strengthening a little bit again against the yen. So just showing that at the moment we're seeing a little bit of a pause in the US dollar towards the end of the week. Looking at sterling, sterling had quite a big rise yesterday. We're back at sort of this 124 level, having really tested the 122 level. But the key thing is that again sterling looks pretty poor in the long and medium term charts. We do have some upside targets. This one activated to 134, 137. This one not yet activated, and even here 125 in the short term. But we do have resistance here, so we shouldn't be too surprised to see sterling falling further against the dollar when we go on the next leg down. If we look at sterling euro, we see here we're very much in a range, but at the moment sterling has had the upper hand, so sterling is just a bit stronger as euro is weaker into the new year. Last night the S&P closed down very, very slightly, just looking at US markets, down really almost 0.08%, so no big deal there. Holding the gains that we saw in previous sessions, and we are still bullish on all 3 time horizons, and the upside target of 2290 still in train. So market's looking pretty good, even though we had a slight fall yesterday. The Nasdaq actually closed up 0.5%, so we are just seeing the tech stocks leading the rise here, and really those tech bellwethers becoming quite critical as to whether the US market, therefore global markets, go up or down, and we're seeing here Nasdaq back into bullish territory on all 3 time horizons. So pretty strong there, and we've got upside targets as 4% in the short term, 9% in the longer term, so seeing that through on the Nasdaq is quite key. If we take a look at the Russell 2000, we did fall by 1% yesterday, so did underperform the rest of the market. But we are still, again, holding the gains that we've seen in weeks since the election, just in this sideways move. Remember, the classic thing in charts is you get this big move up, sideways move, and another leg up. That's a continuation pattern. At the moment, we're still just bullish above the cloud, so we expect the Russell to do quite well. Dow did pull back below the 19,900 level, so we're just not breaking this 20,000 level yet. Might do it today. The futures aren't showing much increase at the moment, so hard to call. But if not today, we do look to be days away from this actually happening, even though we're just struggling to get through that 20,000 level right now. FTSE also just holding its gains. We saw FTSE was up 5 points yesterday. The key thing is it's held those gains. We've had these big moves up. We're not falling back. We're not seeing a sell-off. A shortage of short-term targets there for FTSE. We are breaking this high that we saw in 2015. So we are still running. FTSE looking pretty bullish. We need really new thrust targets to give us that key thing. The interesting thing is that the FTSE 250 was up nearly 1%, and so we are now just breaking this high that we saw in 2015. It's just coming into play now. On the weekly candle here, we see a strong week in mid caps. The rise continues, and we've got a 4.3% upside target, 7% in the medium term. So lots of targets to 4%. Does look like the FTSE mid-cap stocks, UK mid-caps, now just starting to perform. So we are just seeing these rises all happening at different stages in the markets, but they all are starting to come and catch up with one another. Same with the DAX. We're just in this sideways move at the moment. So again, DAX looking pretty strong as we go into the new year. If we take a look at the Nikkei, we see here on the Nikkei, we see here that we're making new highs here, looking pretty strong again. This upside target of 20,000 on the Nikkei. So we are going to see the Nikkei break 20,000 by the looks of things. That's 5% upside. And we've got this massive target of 27,000, 43% upside. So really looking pretty strong there on the Nikkei 225. We have had concerns about China, just a little bit of a sell-off overnight. We're still pretty much below the clouds. It's one market that really doesn't look great in the long run. And we just are, again, finding cloud resistance here. So that's pretty key too. Looking at the Indian market, the Sensex, we see here that we did actually just continue our rise. We've got 2% upside target at the moment. We've found support in the medium-term chart, so that's looking pretty good as well. The Aussie market, last of all markets we'll look at today, the Aussie market closing the week up just very slightly, 0.01%. But the key thing with the Aussie market is we do have these cluster of targets, 4 targets, 58, 59, 50, 5973, 6051. That's 1, 3, nearly 4, 5% upside. So we really do see the Aussie market performing well this year, and the short-term chart is pretty stellar. Now we take a look at commodities, and we start with Brent crude. Just struggling to get back above the cloud at the moment. We see this sort of seesaw pattern here in the point and figure chart. That's actually this sort of converging pattern here showing through. But at the moment, the upside targets are pretty spectacular through on the weekly, and we know this is the strong time of year. So any short-term weakness in the crude market, we just expect it to be short-lived. Nat gas is still in a downtrend in the short term, bullish on the other 2 time horizons. We do have a target back to 323. That's about 2% downside. So that's what we're looking like we're gunning for right now. So just key to keep an eye on that. Moving to precious metals, gold actually we've mentioned each day that gold had a terrible end to the year, but actually we are in a short-term uptrend at the moment. This time of year we tend to see gold rising. We see here the move that we saw last year. We've still got this target in place of 1192. That's 1.5% away from where we are. Given that we're in the low 1100s just over a week ago, we've seen good few percent rise in the gold price just as we've come into the new year. And silver is down 1% today, so it's 1.2%. So that's selling off a bit more heavily than gold. Back to this target of 1633, which was given, and we're now meeting that. But we're still bullish above the short-term cloud here, so pretty significant there. Just looking at Treasury yields, we mentioned yesterday that these were coming back to the 234 level. That's kind of where we'd come to. We now are just testing some support here. So at the moment, Treasury yields just in a bearish phase in the short term. Last of all, a look at some bellwethers before we close the week. It'll be interesting to see what happens to tech today as we go into the end of the week. Some very, very big performances last night on some NASDAQ stocks. Apple was up just 0.5%, but looking pretty good. Just struggling to get back above the cloud here, but we do have these upside targets. It looks like the longer term trends will reign, and we will get through the cloud here on Apple. If we look at Google, Alphabet, we see here that we're up again. Just under 1% last night. We're back above the cloud just on the price and the lagging line. Upside target of about 2%. So that's quite key as well. Bullish, 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 basically. Tech starting to look really good again as we go into the new year. Amazon was up a stellar 3% last night, so That's really been significant, taking us back above the cloud, nearly 6% upside here to $826, and we are just seeing, we still haven't got back on the medium-term chart, but we are just seeing that we're seeing this catching up now. So we've got a little bit of work to do still to get there. Price just getting back above the cloud on Amazon, but it's starting to look better and better. And last of all, we look at Facebook. You'll remember that we said that Facebook had this critical level of $115. We see it here, and we're just below, we're just above that now. Didn't get above the cloud on the medium-term chart, but we did really power through there yesterday, up 1.7%. So Facebook starting to look strong again. Looks like it's coming off this trough, and we're heading for new highs. The key thing is we didn't activate this downside target, and there's massive support and long-term uptrends. That's it for today. Indeed, this week. Next week I'll be in Singapore. See you then.